So let's talk about the central bank, which earlier today denied some media reports that the financial regulator is planning to bar foreign portfolio investors from the regular central bank open market operations auctions. Bloomberg News on Tuesday reported the planned move, quoting the central bank director in charge of monetary policy, Dr. HASSAN Mahmud. Now, Dr. Mahmud himself joins us live now from our Abuja studios to speak to this development. A good evening to you, sir, Dr. Mahmud.
Good evening, Boston.
Thank you very much. Thanks for joining us. What is the monetary policy position of the central bank regarding the open market operations auctions for foreign portfolio investors?
Thank you very much, Boston, and thanks for giving us the opportunity to clear this on the air. Indeed, there's no any plan by the Central Bank of Nigeria to ban foreign investors into the OMO auction market. The CBN circular that was released in 2018 is still subsistent, and in that circular, foreign investors are not allowed to participate in that market, though PFAs and corporates, domestic corporates, were banned from that market. Indeed, the foreign investors are bringing the forex for us, and that's a supplement for capital inflow for the central bank. So that is still very critical at this time, particularly given the crisis and the shortfall in the FX supply. So we're still going to be sustaining that. And the analysis I gave, or the explanation I gave, was at regards to the build-up or the assurance given by the central bank that any investor that wants to take out his fund, if those funds are invested and matured, the assurance that that will be done was what I re-emphasized there. The fact that all investors, the governor has said this in several fora, and that still subsists, that investors can take out their funds in terms of capital outflow when they deem to do so. However, I also mentioned that in the period of crisis, this will have to be done in a systematic manner. It will not be done in a day, and in the sequence of how the bank is going to program that and get that cleared. I also mentioned that even the earlier backlogs that were being mentioned in terms of the demand pressures on the FX have been cleared, and that subsequent build-ups will be cleared over the period. And that was the context to which that explanation came in, or that analysis came in. There was no any referral to the fact that the bank will ban foreign investors. That will even be contradictory to what is subsisting in terms of the central bank guideline in that respect.
Dr. Mahmud, give us an idea of about how much is waiting to be cleared by foreign portfolio investors within the Nigerian market.
I don't have the exact figure now, but I know that a substantial part of the amounts that were being referred to in terms of capital foreign portfolio inflows, not necessarily to the OMO market itself. I'm talking of other FX demand issues that are in the foreign exchange market. That has been cleared substantially, and you see enough liquidity in the market now. So those actions were done in terms of bringing confidence into the market and to give the foreign investors the assurances that their funds are stable in the Nigerian setup, and they should have confidence to bring in those inflows. We need that to get this the foreign portfolio inflows, including foreign direct investments, which are needed to supplement the financing gap of the domestic economy. And also given that the government and every other domestic parameters are also shrunk given the COVID-19 impact and the oil prices developments during the end of 2020 and the beginning of 2021 with the COVID-19. So that shortfall is still there. So foreign capital is critically required in the economy, and it's also good for managing our FX market in terms of the liquidity and depth of the FX market. So meeting the demand is a priority.
Yes, but what roles do the FPIs play in the Nigerian primary auction market of government securities?
Yeah, foreign investors play a critical role in that market in terms that they bring in those funds. Globally, there are a lot of liquidity out there looking for investment windows, and we try to create that environment here so that foreign inflows can come. We had a little distortions in that in terms of the COVID impact on those domestic economy, but we start seeing yields and prices picking up now to attract that foreign inflows. But like I said, it's a demand-supply side thing. We also have to have that assurances to those foreign investors that there's enough liquidity and transparency in the market such that if they want to move out, they can as well also move out if all the necessary conditions and requirements are met. So indeed, the foreign portfolio investors or the foreign investors are critical in that market, including even purchasing in the capital market to bringing in funds, even if it's in the form of loans or FPIs into the market. So they are critical and they're very important, and we are cognizant of that, and we want to make the market very, the financial depth of the market to accommodate these substantial inflows that are required in the economy.
Well, let's talk about how accommodative will the central bank or monetary policy be in 2021 for both foreign and local portfolio investors? How accommodative will your monetary policy be this year?
Yeah, the monetary policy is related to the interest rates in terms of the rises in the fixed income market and other money markets in the economy. Currently, the bank has reduced rates in this year twice, and to accommodate, to allow for credit expansion, and we expect that to translate to also the lending rates coming down. The central bank has adjusted, has reduced its rates for intervention funds to 5% now, moratorium extended. We also did a lot of things in the financial market to allow the financial market to be robust enough to drive, to be a catalyst for the required growth in terms of financing economic growth. So that still subsists, and the projections for 2021 will be determined by how things turn out in 2021 in terms of global development as well as domestic fundamentals. We see the fourth quarter of 2020 becoming quite promising, 0.11% in terms of GDP. We're already in positive territory. We expect that to improve further in the first and second quarter of 2021. So that will inform what monetary policy stance will be, and also the movements in the rates, both in the money market and fixed income market, and the MPR will play along that parameters to make the market, to build the confidence in the market and also attract both domestic and foreign investment in the market or savings in the market needed for, this financing the output gap.
Yeah, well, one of the issues that will bring confidence in the market, everyone's talked about, how close are we to a unified exchange rate, Dr. Mahmud?
I think we are almost there, because if you look at the rates playing out in the market now, one, we've always emphasized, or the governor has always emphasized, the importance of the INE window, and that market is substantially or significantly driven by demand and supply forces. We see the rates that are moving in that market. The secondary market is also, more or less the same with what is going on in the INE window, and that will depend on, the volume of liquidity in the market, the demand levels in the market. So we want to
Dr.
have
Mahmud,
that flexibility in that market so that...
the INE window, Dr. Mahmud, we've seen as high as 422 to the dollar, even at the INE window. Does that mean that the current exchange rate is being adjusted?
Or
will the central bank adjust to the market?
You see daily spikes.
Please go ahead.
No, you see daily spikes in the market, which are a reflection of demand and supply, like I said. And in such cases, when central bank sees the rate deviating substantially from, the optimal rate or the assumed optimal rate of the market, central bank intervenes to bring the rate to normal situations, or the ones that we think is appropriate to drive growth and also trade in the market. But you cannot stop some daily spikes. It's a reflection of the liquidity fundamentals of the market. You can see that, but what is important is how stable is the rate in the market for investors to plan. So, but these are daily rates, so the frequency is high, but you can't see 422 raining over a long period. You see adjustments coming in the market as liquidity comes in, and we want that market to play on its own fundamentals with little of no central bank.
Just a quick one,
intervention.
Dr.
We are seeing
Mahmud.
that building up even during the crisis.
Dr.
Yes.
Mahmud, just 1 second, quickly. Do you have enough firepower to keep defending the Naira? I mean, the central bank? Is that a yes or no?
I always don't like a yes or no question because there are a lot of things surrounding that. For now, we've given the confidence to the market that yes, we're
thank you so much, Dr. Hassan Mahmud. Dr. Hassan Mahmud, thank you so very much for your time this evening, Director of Monetary Policy at the Central Bank.